Good morning, market snipers. Welcome back. This is Jesse getting started. Today, we're getting started right at 8:30 a.m. Pacific Standard Time, a little bit earlier than normal, where our office isn't set up as good or as cleanly as our home base, but we're at grandma's, and so we're doing the best we can over here on my one laptop. No monitors, no dual monitors, no 3 screens, no microphone, no camera, just everything from the laptop. So that's what we're doing today. It's going to be a little bit more difficult, but I did figure out how to get StreamYard onto my other browser so I can look at the Explore charts over here. And so at least that's better. I don't know if I'll be able to switch back and forth. Possible. Might be a little clunky in between, but we'll start off with the Wyckoff. Bitcoin is completing the Wyckoff distribution pattern, right? So that's what we're looking. That's where we've been watching this since October 8th. I made this chart October 8th, and there was a lot of comments October 8th, October 10th, October 12th, 14th, 16th, October 30th, November 4th, November 6th, 10th, November, all those times, we were like, oh no, we're going new all-time highs. We're going new all-time highs. We're going new all-time highs, new all-time highs, new all-time highs. And it continues to play out similarly, right? Not exact, but similarly. Even this last bounce was off compared to where I drew it, but like timing-wise, it was not. Like, maybe this bounce would have been like 93,000 the way I drew it. It comes up to 99. It continued downward until about 84,000 where it closed. It did hit 80,480-ish or 80,500-ish. And then bounced very similar to up here, right? So very similar bounce. What is that? Just call it 6% bounce or $5,800, right? And then you come up here and it's like 8% bounce. So 6%, 8% bounce, whatever. Doesn't really matter. The overall idea is playing out very, very similar, eerily similar, right? This wasn't drawn out yesterday. This wasn't drawn out last week. This wasn't drawn out 2 weeks ago in the middle of November. It wasn't drawn out in the 3rd week of October. It wasn't drawn out in the 2nd week of October. This was drawn out on October 8th, and we continue to watch it. So all the comments all the way down makes sense that you didn't believe, don't believe, don't believe. But now that the comments are down here that still don't believe, I mean, that's pretty. You just have to have the blinders on, right? You just have to have the blinders on. You're really late to the party if you think we're going to go up and make new all-time highs. It's completing this distribution pattern, right? So we'll see in the next coming 1, 2, 3, 4, 5, 6, maybe by December 9th, right? December 10th, we see it complete. And then after that's been completed and everyone's flipped bearish and we hit 76, 75, $74,000 Bitcoin, trap some late shorts, capitulate the longs, right? Wipe out more longs. Then once it's completed, then I think we would have like it would be about 40% drop. And that's very common. Let's see, the wick was probably up here. We'll just call it 126, right? 126, maybe it wicks below. 40% drop. That's very common for Bitcoin and stocks and tech stocks and stuff. To the initial drop to be 40%, like 35 to 40% initial drop. Some tech stocks have gone 45, 50%, probably Bitcoin in the past. So that's very common. And then maybe a 45 to 60 day rally, not as high as some hope, but maybe it's 30 to 40%. So if it comes up, wicks all the way down to say 74,000 as an example, 20, 30, back up to 96,000, maybe hits 100,000 again, maybe 103. And that would take in my mind, it would take 45 to 60 days to play out. And it wouldn't just be a straight shot. That would be too easy. So that's what I think will happen next. So as this distribution pattern continues to play out, it's in phase E, right? It's about right here on phase E, starting to take out this pivot point. So over here, then you just have a few more days, right? A few more days, a week, whatever. It doesn't really matter the timing of it. But it is right on track of timing. It's eerily similar timing, right? A lot of times it is ahead on the drops, and then you can see the consolidation lets my drawing catch up, right? So ahead on the drops, let it catch up, and then then we'll probably retire this. Of course, we'll probably have some reminders along the way. That's always fun, like I told you so. But overall, we'll be able to retire this chart. And I know a lot of perma bulls want me to retire this chart, but probably not until we see a new low made, right? So a candle close below 84,628 would be a new low. It would put in a lower low, another pivot below there. And then, of course, the wick was 80,500-ish. And we'll find out if it continues all the way down. Maybe even wicks down to 74,000, 73. Who knows? I don't have a magic crystal ball, right? So that's what we're continuing to watch over time. Breaking news yesterday. I was just a little side. People who I was playing. It's kind of the ego was bruised the most, right? Not really. Yesterday and the day before, I was playing pickleball with family, and yesterday I was still holding court. I was still winning. Different team members, one-on-ones. I was winning. The nephew, it's 17, peak prime. I was beating him again. And he hit a ball over my head. I was backpedaling. My foot got caught on the court and rolled my ankle backwards. Sat in the emergency room just because I wanted to get x-rays. We tried to go to urgent care, but they didn't have an x-ray machine because it swelled up quick. The backside of my ankle got swollen very quickly. And so, of course, my sister's a firefighter and her husband's a flight nurse and all that stuff. And all my aunts are nurses, and they're all over here. And they're like, you got to go get it checked out, just at least eliminate, see if it's broken, maybe you need surgery or whatever. So I went, got the x-rays, only took an hour for all that, and then waited at least 2.5, 3 more hours just for the results of the x-ray. And sure enough, slight fracture, but torn ligament. So the physician assistant didn't think that I would need surgery, but I'm supposed to follow up with orthopedic surgeon this week once the swelling goes down, see what they think. But hopefully I don't need surgery. They give me a walking boot, and I was supposed to do a live stream today and then go golfing with friends and family. I had to cancel that. So here we are. I've got a big old walking boot on. Taking a shower was interesting this morning. So anyways, here we are. Making it through. 64,000. Okay. So a lot of people will be. So anyways, yeah, I'm still here. Got my ankle is swollen still, but the swelling has gone down. So, the old rice, rest, ice, compression, and elevate, right? The old rice. So that's what we're doing. I did hold the baby with my walking boot. It was hard to chase her around. She's 17 months old. So that's going to be the hardest part, is not being able to like play with her as good. Thanks, my man. Thank you, reposting. Help me with the algorithms. Smash the like, hit the comment, share this with your friends and family. And especially I'm doing this with a torn ligament on my ankle, slight fracture on the ankle, all that stuff. Got a walking boot on. Yep. So a lot of people are going to start calling for lower prices, especially once we get below $80,000, right? So assuming we get below $80,000, assuming we get to 78,000, assuming we get to 76,000, maybe 75, maybe 74, maybe 73 with the wick, right? And complete the Wyckoff distribution chart. There's going to be a lot of people calling for 60,000, 64,000, 63,000. And eventually it's going to hit those numbers, in my opinion, eventually. But as people are going to get more and more bearish as it hits the 70s, that's when I think it reverses. And that's when I think we go into a rally, right? So it hits 40%, goes down to 76, 75, 74, whatever it is, whatever the number is, and then goes through like, everyone's doom and gloom, everyone's blah, 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 then goes into a rally, then traps more longs, has to get the perma bulls excited again, right? Perma bulls get excited. We're going to go make new all-time highs. It's the 5th-year cycle now. It's the 6th-year cycle. It's the 7th-year cycle. It's the super cycle, right? This is all the same psychological pattern as end of 2021 and all the way into 2022. That rally went from it was like 45 to 60-day rally in 2022 from, end of January or February, March, and into April, right? So it seems like it's repeating again. So that's where we're at. So a lot of people are going to be calling lower, and then once this Wyckoff distribution is completed, right? And there's like a 40% drop. That's a classic bear market move. Followed by the complacency stage of a bear market, aka 45 to 60-day rally, 30 to 40%, and then drop from there, right? Drop from there, go back, test the 200-week moving average, which is right around $56,000. So let's see. Can I change this? Let's see. This will be interesting. Remove. And then no. Stop screen. This is going to be interesting. Okay. And then share screen again. And where's the other chart? Let's see. This one? Nope. This one? Yep. There we go. All right. Okay. I got it. There we go. Yep. Everything looks good. Okay. Yeah. So don't have to do this when I'm at home and I have multiple screens, but we'll get through it. Let's see. All right, let me go over here. So moving average, this is a 50-day moving average. It's showing the overall trend, right? So overall trend. Let's put it back to the 200 though. Oh. What the heck? Is number lock on? Oh, there we go. I don't have my regular keyboard on either. This is everything's from the laptop. I brought my regular keyboard, but on my mom's mini desk, I can't fit even the keyboard on her. Just gotta have fun, right? Just gotta have fun. So that's what we're looking at still. So the top was almost 126, right? Depending on what exchange you're looking at. And so 40% drop could be right around there, right? With a wick, 75, 74, somewhere around there. This line would represent like candle closes, right? So drew this out before Thanksgiving, talked about on the live stream, it was at $81,000. Maybe we'd see it bounce to 91,000. It bounced to 93,000, right? So I don't have a magic crystal ball, but just the idea of where the trajectory of the trending dots would be. So from 81,000 to 91,000 to 76,000, right? And I posted that on Twitter X as well. We covered it on every single live stream. Here we are, right? It did bounce up to this yellow line idea, this crazy yellow line chart idea. It could bounce all the way down to 76. I mean, drop all the way down to 76,000, 75, 74, whatever it is. Then bounce, then maybe put in a higher low. And this starts the process. Maybe this is even bullish divergence. Ooh, yeah. I think we talked about that before already. But maybe this creates bullish divergence, right? Bounces up, drops back down below 80,000 again. Gets everyone bearish again. Meanwhile, we're looking for this breakout, this bullish divergence, higher low breakout, come up, hit some retracement targets, drop straight down. So they're liquidating everybody. They're liquidating the high leverage longs. They're liquidating the high leverage shorts, all of it. Everyone's equal opportunity liquidations, right? Come all the way back down. This just, when I visualized this, it just seems like it was visualizing the max pain for both bulls and bears, right? So this would unfold so this would complete the Wyckoff distribution. This would possibly create bullish divergence, right? So maybe it creates bullish divergence, bounce, put in a higher low, break out, let's go, come up, wipe everyone out again. Everyone's like, oh my gosh. Take out this pivot point and then start the move downward. Break back down, lower high. No one knows what's going on. And then just boom. And then back to the bear market, right? Well, I mean, this would all be part of the bear market, but back to like, this would start to get into like the capitulation, like down below 70,000, people will start capitulating, right? And the permanent bulls, they'll just keep moving the goalposts, right? 116's got to hold. 108's got to hold. 100's got to hold. The support line's at 92,000 now. The support line's at 84,000. 80,000's the low now. And then there'll be 70,000. Then, and then below 70,000, they would be like, just DCA, bro. Instead of buy the dip, they would just DCA. And I saw a post earlier from Archie at Bitcoin Archive was saying that Michael Saylor was buying $11 million worth. What happened to the 400 million? What happened to the billions upon billions of hundreds of millions of Bitcoin? Now it's just an $11 million buy, $11.7 million buy. It's like, hey. So the dip buying is becoming less and less. And so when you're doing an $11.7 million buy compared to like the previous buys of 400, 200, whatever, hundreds of millions, almost seems desperate. Desperate to keep the narrative going, right? Desperate to try to trap some more people in. Desperate to, keep the momentum going, but the momentum's lost. The momentum to the upside is lost. And when we had that weekly close below 108,250, that was confirming the bear market, in my opinion, because there was longer term bearish divergence followed by a lower high and a lower low on the weekly chart, right? And then, of course, all the other reasons why. The monthly MACD, we can take a look at it because now we're in a new month. So that closed. So we're going to take a look at all that. So this is kind of how I see it playing out. Do I think it's going to play out exactly? No, I don't. But could it play out very eerily similar to the Wyckoff? I do think it could play out similarly because this just, when I was visualizing, it just seems like it was max pain, right? Come all the way down, complete the Wyckoff, bounce, put in the bullish divergence, higher low, boom, all the way back down, boom. And then that lower high would be like the time for a bear to attack to the downside, right? So that's kind of the way I see it. What else? I got all my charts, don't I? Yes. Let's take a look at the weekly. Let's go into the log. There you go. There's one chart. So it lines up, right? It lines up. Could come close down here, right? Maybe close down here. Oh, shit. There's a different one. There we go. Closes down here, right? 77. Maybe even the weekly closes here the second week of December. Then starts the Santa Claus rally. Then starts the relief rally. Then, that would be like another macro lower high. Let's see. This was originally the Heikin-Ashi. So it seems like it's right on track. This wasn't done yesterday. This wasn't done the week before. This chart was laid out October 10th. So here we are nearly 2 months later, and it continues to play out similar to 2022. Do I think it plays out exactly? No, I don't. But it is playing out similarly again. And that's what we're continuing to watch, right? We're watching the same charts since October 8th, October 10th, and it continues to play out. And you can see like the way this is drawn out, if it brings it down to that area, I think it front runs my third target, my third longer term target. I don't think we hit the third longer term target. It's possible that we do, maybe a wick, but maybe a wick to like 73,000. But what I think happens is that my third longer term target, they like front run it, right? They take profit, they front run it. There's a relief rally, and then comes back down and hits the third target like in a couple of months, 2, 3, 4 months, right? However long it takes for the relief rally to play out. And then, maybe it's, 5 to 6 months for it to retest the 200-week moving average, which is currently at 56,000. And maybe by then it'll flatten out around 58 to 60,000. So again, this is all pure speculation, but that's what we do. We speculate. And obviously none of this is financial advice. Obviously it's for educational purposes only, and hopefully have some fun along the way, even if that means making fun of me for spraining my ankle, tearing a ligament, and a partial, or what was it? I forget the term. partial fracture of my ankle from playing pickleball. It's embarrassing. Like I said, my ego was bruised yesterday. I feel a lot better today, but because once I got the walking boot, I felt a lot more confident that I could do stuff on my own. Like, I just don't want to be dependent on my wife would help me, right? I just don't want to be dependent on the wife or my mom or anyone. I just want to be 100% independent. I'm probably like carrying an open cup of water. That's where I would need help. If you give me a water, or you give me something with a lid on it, I can carry it myself. I'm using crutches, just keep the weight off of, even with the walking boot, for at least till the swelling goes down in like 3 or 4 days. But so anyways, so we can make fun of me for doing that to my ankle. Yesterday, no, I was annoyed. I'd probably bite your head off if you talk shit. Like, I was in a space of like being like borderline angry at myself, but today I feel good. As soon as I got the walking boot, like 4 hours later, I was like, okay, I could do this. Sucks I can't like chase my baby around, but I could do this. I had to cancel, like I said, golf and all that stuff. But what else? Back to the stream. No comments. Oh, well, also real quick before we finish up the Bitcoin charts, hit the altcoins, all that stuff. None of this is sponsored by anyone. We don't have any affiliate links. I've never taken $1 of affiliate money. So, but we will promote our own stuff from time to time. And I don't know if you'll be able to see this or not. Probably not. Nope. So anyways, I'm not going to change it out, but we got the sharpshooter candle strategy 4.21 trading bot. We got the market sniper sharpshooter RSI 3.2 trading bot. We've got the dashboard. We got all that can be found on the website. And let's see. Features. Let's see. I'll find the website. MarketSniper.pro. Features. Yeah, let's see. And on the website, you can see, the 2 trading bots, the dashboard, and then the heat map, the liquidity heat map coming soon, right? So that's all going to be included into the $49. So anyways, check that out on the website. You can find it on my Twitter profile. You can find it on the Market Sniper Pro Twitter profile. And that's the only website we have. So it's all there. You can log in, create an account, and, let's see, where am I on stream? Oh, there we go. You can create an account and manage your own subscriptions now. You'll automatically gain access to the Discord. And if you cancel your subscription, there's no refunds, but it's too hard to manage all that. But you would have access till the end of the month if you cancel out, right? You'll lose access to like the trading view, trading bots, and indicators, stuff like that. But cancel anytime you want. You can do everything by yourself. Manage your own subscription. You can, like, if we roll out a second price point, you could manage it to downgrade or upgrade at any time you want. You can cancel, like I said, and then of course you don't have to wait on me to give you access to Discord. You'll automatically get access to Discord. You don't have to wait on Alex, who's helping me out with all this. He's doing a great job. He's awesome. And so with that, we're automating everything. The website, the access, the trading bots, everything is getting that way. So with that, let's jump back over to the charts. So again, this weekly chart is right on track. There's sell signal, the buy signal, but we said, do we trust it? It's below the trading dots, and we didn't trust it. And then, of course, another sell signal and a close below the upward trend line, multiple candle closes below the trading dots. And then once it put in that lower low over here on the first week of November, that was confirming that, you know, A, it was another sell signal. B, it was below the trading dot. C, it was below the long-term upward trend line going back to 2024, September 2023. Candle closed below it. First time in 2 years, right? Over 2 years. And then confirmed with a lower low, right? Confirmed with a lower low. So a lot of reasons why. And this is all longer-term bearish divergence, right? So longer-term bearish divergence, and usually price catches up to the divergence. So that's where we're at there. Let's see. That was downward channel, but that's on log. Let me take it off log. So, right, just showing that the overall trend is downward, right? So if it does come all the way down here, you know, this is the market cap, but you know, say if it's down all the way to $74, $75, $76,000, goes to a relief rally, right? Maybe up back to that 2 trillion mark. Everything is good. We're back on track. We're going to the moon, blah, blah, blah. Super cycle. You'll hear it all again. The talking heads like the Tom Lees, the Raoul Paul, everyone will be talking about end of Q1, maybe Q2, we go to see new all-time highs, $180,000 Bitcoin, blah, blah, blah. $250,000 Bitcoin by end of quarter one. You know, you're going to hear it all on the relief rally, but it's just a relief rally. So the bear market has already started. What else? Yep, so we've covered that one. And that one. Below target 4. These are the 4 shorter term targets. They're all hit, bounced back up, rejected, also rejected around the small CME gap that everyone was talking about. We were talking about it back here. Everyone was talking about it over here. Everyone. So rejected, and now it's dropping down. So here's the 200-week moving average. HODL, gap down, right? Just filling gaps all the way down. There's so many gaps to be filled, right? So many gaps to be filled. So all of these gaps have been filled so far. This is an old one that was filled. So, right? Yep, it was filled over here. So you got this older gap at $19. And we talked about this on previous live streams. If it's filling this gap over here, Bitcoin price is probably at $67,000 to $70,000, right? So as of right now, like if it completes the Wyckoff distribution, you can see the head and shoulders pattern we called out. The price target was hit at $25.90 on HODL Bitcoin ETF. But if it completes the Wyckoff pattern over here and doesn't fill these gaps right away, they could. I think it's less likely. I think it'd be more painful to complete it. Bitcoin would be at like 74,000, right? Then go into a relief rally, and then fill the rest of those gaps. So again, it's all pure speculation. What else? Let's go to this. Is this the? Yeah. Okay. And then if you go over to right. So this is the daily chart. It's bearish. 3-day chart. It's bearish. since October 16th. October 13th, 3-day chart's been bearish too, right? Weekly chart, bearish. Long-term bearish divergence. So each exchange looks a little bit different. Like on a different exchange, this was a sell signal followed by a buy, followed by blah, blah, blah. So, but on this one, this exchange for Binance, it was only a sell signal here. So it's kind of interesting. That's why I look at multiple exchanges and the futures and all that stuff. You come over here to the 2-week chart. It's bearish. We talked about it. We covered it. Long-term bearish divergence. Then you have a RSI sell signal. You have a sell signal. And we cover this where there hasn't been a sell signal in the 2-week chart and below the trending dots since 2022. There was one, then there was a second one after the relief rally, right? So this is the 40% drop. This is the relief rally, and then went all the way down, right? This 2-week sell signal was the beginning of the bull market, and it was above the green trending dots. This is below the green trending dots. And then eventually you can see the sell signal. You can see the trending dots start to flip red. If price is down here in the next 2-week candle, the trending dots are going to start flipping red, right? And then that would be probably the start of the relief rally. Like very similar as these higher time frames start to roll over. They're lagging. Some are more lagging than others, but this one, the 2-week chart closed on the 24th, right? The 23rd, 24th. 3-week chart has a pending sell signal. Had a candle close below the trending dots. This is the first time there's a candle close below the trending dots on the 3-week chart since February 2023, right? So another milestone, another reason why it's a bear market. Did not close below the trending dots over here in May, June, July. Bounced off the trending dots. And then January 2022, there was a 3-week candle close below, right? No 3-week candle close below the trending dots. No 3-week candle close below the trending dots. 3-week candle close below the trending dots. And that happened on November 17th, right? Now we have a pending sell signal, very similar to over here. Very similar. Monthly chart. The monthly chart has not retested the trending dots until November of 2025. And now we could get the first candle close below it. Did not retest the trending dots over here in June 2021. Did retest it in January 2022. Then closed below it. Then relief rally. Then lower prices, right? So very similar to over here again. Another reason why. Doesn't matter what the on-chain data says, right? Doesn't matter what the on-chain data says unless you're looking at the on-chain data incorrectly. Very common. You've got long-term bearish divergence. Then you had an RSI sell signal. So you had an RSI buy signal in March 2023. The last RSI sell signal was November 2021. And then it went into the bear market, right? Confirming the bear market. We already had the RSI sell signal on the monthly chart. If you look at the MACD, already had the bearish MACD crossover, right? You can't see it on this one because there's not a lot of chart history. But you can see over here, there was a MACD bearish crossover when price came back to retest the trending dots. Bearish MACD crossover, price is at the trending dots, right? It's a bear market. There is a bullish crossover back in March 2023. There's bearish crossover here, bearish crossover here. So not sure how much more confirmation you need, but you can see the difference when I said, 2 months ago, you'll see the separation on who's a pretender and who can spot the reversals. The top is always, in hindsight, the top. It always starts with the local top. So the local top turns into the top, and that happened when it transitioned from the daily chart being bearish to the weekly chart being bearish. And then once we saw the longer term bearish divergence on the weekly chart, followed by a lower high, followed by a confirmed lower low at 108,250, confirmed at 104, then that was confirming a longer term downward trend, in my opinion. So, and then of course the 2-week chart, the 3-week chart, the monthly chart, they've all basically confirmed, in my opinion. So expect bounces, expect a relief rally, but also expect the Wyckoff distribution schematic to complete first, then possible relief rally after that. So that's what we're looking at. That's what we've been watching, all that stuff. Go to the daily chart, right? And you come over to, let's see if there's any, let me switch back over, see if there's any. No comments. Okay. Sorry to be the bearer of bad news. Let's see, we're already 43 minutes into it. We covered Bitcoin for 43 minutes. Holy moly, guacamole. All right, let's go over to Ethereum. Looks like it wants to come in to retest the 200-week moving average, which hasn't happened since July, but round tripping back over. A lot of the altcoins are making new lows since November 2024. So more than 12 months, right? That's Algorand, XRP, right? Cardano, right? Way back here, everyone thought the bottom was in. Way back here, everyone thought the bottom was in. Way back here, everyone thought the bottom was in, right? And I said, at least a lot of this wick is going to be filled, right? Because Binance had the big wick down, but not all other exchanges did. So the market bosses, the market casino, wants all charts to look similar, right? Otherwise, you lose confidence in gamblers, right? So you're going to lose confidence in gamblers if Binance shows a huge wick down on Cardano to 27 cents and other exchanges only went to 57 cents. That doesn't spark confidence for gamblers with, 20, 40, 100x, whatever they're using, who knows. But the super high leverage, it doesn't look good. So eventually, in my opinion, that they were going to fill most of that wick, if not all of it, and or take it out, right? So we said expect bounces along the way. There were bounces. And now, like Cardano and a lot of the other ones are starting to fill that huge wick that was open on Binance October 10th, right? Chain link back below 200-week moving average. And we talked about it, like on every single one of these bounces, we were talking about that, hey, these higher time frames are bearish. It's not going to just flip around by tomorrow. So every single mini bounce, right? Maybe it could bounce back into the trailing dots, but we didn't expect an alt season. We hope for an alt season, but we didn't expect an alt season on most of these alts until the ship gets turned around, which would take time, right? It would take time because you got the weekly chart, right? That just takes time. And then however the price, like if it were to like make a move like that, it would take time for the ship to get turned around. Not expecting it go like influencers will just say like, oh, we're gonna go to new all-time highs, and there's a huge big arrow, right? It makes no sense because over here looks different. Over here looks different. It's not, the price isn't down here below the trailing dots in the weekly chart. Price is over here consolidating on the trailing dots and then breaks out, right? So the trailing dots come down, consolidates, coils, tightens, all that stuff, then break out. But not right now, right? So we'll see. But yeah, that was the breakout that I played over here. Watching. Boom. Mom caught the 350% move. Boom. Not on Cardano, but on XRP, XLM, HBAR, Algo, all that stuff. So it's in a downtrend. Cardano's in a downtrend. We talked about this. We covered it. When the 200-week moving average, December 2024, started to slope downwards, it no longer felt like we had a chance to go see new all-time highs. Kept hope. And then it started trending downward. And I'm like, oh, no, I'm not seeing it. That's not a good sign. This is upward sloping. This is downward sloping. So you can keep the hope. Bounce. No, right? Chainlink only hit 3 out of 4 longer-term targets. XLM, downtrend, coming back for retest of the 200-week moving average, most likely. Chop Suey, Bitcoin dominance, said it's possible comes back up here, 61. And then maybe we see like a bigger bounce or a mini alt season or blah, blah, blah. We don't know yet. Dollar, that's the weekly chart. Seems like it's coming back in for a retest of the trending dots on the weekly chart, right? VIX. NASDAQ. Let's see the daily chart. Only one target so far. This could be a lower high. It's too early to call it. SP 500 has not hit any targets yet. Could be a lower high, but too early to call it. Let's see. We got the Magnificent 7 back on here. SMCI, UNH, Google, Russell. That just seems like a short squeeze. Could be a lower high. One target hit so far. Microsoft. New gap up here. Small gaps over here. Tesla. Is this going to be a lower high? Maybe. 3 out of 4 targets have been hit to the downside so far. TQQ, is this going to be a lower high? Maybe. Dow Jones breakdown, come back to back test the upward trend line. See if that's a lower high. PLTR, eyeball tests, Apple hovering on around all-time highs, Amazon, Netflix, Nvidia, ANF. Now that's a short squeeze, right? From 69 to 101. Holy crap. That's crazy. So gapped up and ran 48%. That's a short squeeze. This gap was filled over here, right? That gap was filled over here. There is a gap up here. It's not huge, but it's a gap. Crazy. So that's about it there. What else? What's MicroStrategy doing? 155. The canary in the coal mine, right? The canary in the coal mine. Been talking about the canary in the coal mine forever. It was in the last bear market. It was on some of the upside positions to Bitcoin. It led the way for Bitcoin to the upside, like in when Bitcoin was at 65,000 and went to go make a new all-time high back in 2024. The top was in. Then you got this Adam and Eve double top pattern. Then it confirmed below with the weekly close below the confirmation line. And, you know, you got a Adam and Eve double top bottom target here at $71. It's coming in to retest the 200-week moving average at 143. So probably contributes to Michael Saylor only being able to buy $11.7 million worth of Bitcoin from MicroStrategy. So it's not a good look, right? And it's currently down 71% over a span of 1 year and 4 weeks, right? So it's been in a bear market. And it's the canary in the coal mine for Bitcoin. And yet you still see permabulls, influencers, experts, quote unquote, talking heads, super investors, super traders still calling for new all-time highs. Even though the canary in the coal mine, even though the higher time frames have flipped bearish on Bitcoin, right? So I said a long time ago, I said back in 2020, end of 2021, you would see the separation once we go into a bear market. Same is true for 2025. Once we went into a bear market, you would see the separation of the skill level, in my opinion. And it's been true twice now. It was true before. It's been true a second time. And a couple of the larger accounts recognized the bear market this time. Most of them did not. So some of them that recognized it this time did not in 2021, and we're calling for, you know, new all-time highs all the way till April 2022, which is really late to the party. It's like 5 months late, 6 months late. And, you know, they were CMT certified, huge accounts, sell courses, sell this, sell that, right? Experts, and they missed it. And some of them did catch it this time. So, you know, they did evolve. That's good. That's good. But most of them did not. So here we are again. Deja vu. Deja vu. So I think that's about it. Covered all of it. I'm not seeing any comments. Can't post comments to some destinations. Eventually, Jack. Thank you. Yep. So with that, it's about an hour. So I think we'll call it here. And thanks for all of your support. I appreciate all of you. And we'll see if this Wyckoff pattern, distribution pattern plays out in the next week or two. Completes it. 76, 75, 74. Who knows if it wicks down lower. And then from that point, we'll be looking for the possible relief rally that would increase 30 to 40% over 45 to 60 days. Kind of how I see it all play out. Whether it does or not, who knows? We don't have a magic crystal ball. Just, you know, the crazy idea that I had on the chart over here, right? So Wyckoff played out based on my drawing, almost very eerily similar. see if this one completes the Wyckoff and then plays out eerily similar. We'll see how it plays out. So with that, hope everyone has a good rest of your day on this crazy manic Monday. We got through it. I'm in a walking boot. It didn't stop us. Can't stop, won't stop. So with that, hope you have a good rest of your day, and we will see you on tomorrow's live stream. Thanks, Alex. Appreciate that. Thank you. Yeah, ice, elevate, let's chase the baby. That's about it. So thanks, Alex. Appreciate that. With that, have a good rest of your day, and we'll see you on tomorrow's live stream.